So people that say that don't understand the fundamentals of the stock market. And I think it's important that people do understand the fundamentals of the stock market, because if they don't, they will be apt to sell when the market goes down, or they will never go into the market to begin with, because, as you said, they'll look at this as gambling. Understand that when you buy the stock market, you are purchasing real shares in real corporations that supply the United States and the rest of the world with all of the goods and services that we rely upon. Okay? If you want to put it another way, you are investing in capitalism. Now, let's try to understand the market. First of all, we use the word market, and what is the market? So, there are many markets. There's the stock market, there's the bond market, there's the real estate market. Let's focus on the stock market for the next few moments. Stock market is a representation of all of the stocks that trade in the market. There are many, many markets even in the stock market. Let's focus on the one that most people have heard of, which is the S&P 500. The S&P 500 are the 500 largest companies in the United States. Okay? Now, this is a chart which I love. It is the S&P 500's return trajectory going back from 1926 to 2020. You are going to notice two things about this chart. One is it's very choppy. The market does not return in straight lines. This is what makes it difficult. This is called volatility. It goes up, it goes down, it goes up, it goes down. When I was a little boy, my father used to listen to this market guru on the radio. His name was Larry Wachtel, and he was with a firm called Bache and Halsey Stewart Shields. It just shows you how you remember things from your youth. Whenever Larry Wachtel came on the radio, whatever we were doing, we had to stop. We had to be silent, because my father would listen to him like he was a prophet. And every day as a child, I would hear, oh, the market went up, and the market went down, the market went up, the market went down. And to me, it sounded ludicrous. It sounded illogical. It sounded like this thing which goes sideways and just does up, down, up, down, up, down. Kind of, what's the point? So one day I asked my father, I said, Tati, up, down, up, down. Ultimately, what does it do? Does it go sideways? Does it go down? Does it go up? And my father says, son, it goes up. And I asked the question all kids ask, why? And my father said, I don't really know. One day, you'll read some books and you'll figure it out yourself. The second thing you notice about this chart is that it goes up. It goes up. Why? That was the question, right? Why does it go up? And is it true? Maybe that's true from 1926, but maybe for the next 50 years, it will just go down. And my luck, I'll get in right over here and then I'll watch it go down. Is this a casino? Is there something real, fundamental, that's driving this chart? Good question, right? We're going to use my bottle of Poland Springs to illustrate why it's not impossible. Wall Street, we never say impossible. It is highly improbable that the market will go on a downward long-term slope. And if it does happen, as we can discuss, we have a lot more to worry about than your money in the stock market. So let's take the company that makes Poland Springs. And let's try to understand why, unless something fundamentally changes about the taste of consumers and we stop consuming expensive bottled water, that this company 10, 20 years from now will be worth more money than it is today. So there's three components, three things that drive the stock market over time. The first one is inflation. Remember we talked about inflation? That insidious thing? Inflation is your enemy when you were sitting in cash, but long term, it's actually your friend in the stock market. Why is that? The answer is, where does your inflation go? Who collects inflation from you? The answer is Poland Springs and every other company. Your gasoline prices go up, your food goes up, your electricity goes up, your clothing goes up. The companies that make all that are taking more of your money. So inflation will drive the price of water up. So you're going to ask the obvious question, yes, but everything is costing Poland Springs more. Their salaries go up, the cost of plastic goes up. That's also true. But a company operates on what's called a profit margin. If their profit margin stays the same, let's say it's 10%, then the inflationary factor, they will keep 10% of that. And therefore, what's going to happen? The stock price of Poland Spring will go up. Let me explain to you why. Let's make believe Poland Springs in 2021, the stock price was $10 a share. Let's keep the numbers simple. Poland Springs earns $1 on that share, or said another way, they have a 10% profit margin. Let's fast forward 20 years from now, and inflation has brought the price of a bottle of Poland Springs to $2 a share. If they keep their profit margin exactly the same, they should be earning 20 cents per bottle. Stocks are a function of earnings. If Poland Springs stock, let's keep the numbers simple, was trading at 10 times earnings in 2021, its stock would be $2, right? 10 times their profit margin. I'm sorry, $1. 20 years from now, their profit margin is, right, $2. Therefore, their stock should be $20. So the stock went from 10 to 20 because inflation brought it there. Is that clear? Let's take the second function of the stock market. It's called population growth, or in economic terms, GDP growth. Part of what drove this was inflation. Part of what drove this, there are more people in the world today than there were here. Looking back at Poland Springs, 20 years from now, more people will be drinking Poland Spring water than they are today. Think of the market as a whole. All the goods and services of the market will be consumed by more people. Third component is ingenuity. Companies have figured out how to make more money. We talked about Poland Springs' profit margin remaining at 10%. But if you look at the great companies out there in the S&P or in other indexes, you will find that their profit margins go up. Well, how would Poland Springs improve its profit margin? The answer is, well, if you've ever picked up a bottle of Poland Springs lately, you'll notice that it's not much different than a plastic bag that you put your tuna sandwich in. 5 years ago, that wasn't the case. Poland Springs have figured out that they can save 30 to 40% on the cost of their bottles by doing that. Have you noticed how small the caps have become? The entire supply chain of companies like Poland Springs and others, the cost to remove the water from the ground, the technology that drives all of their assembly lines, all the automation in the world is bringing down the cost of production. And that falls to the bottom line of a company, which gives them a higher profit margin. So let's go back to the S&P. Why do I believe that this line will continue to trend up? Population growth. So unless you believe that the world will go into a perpetual population decline, it's something pretty consistent to bet on. Second, inflation. Inflation is a function of money supply. The amount of money supply we continue to see governments churn out is going to drive inflation over time, and we're seeing a lot of talk about inflation right now. And the third component is ingenuity. So unless you believe that the world's population will decrease, that we will somehow not have inflation over the next 30 to 40 years because the money supply will contract, and that the entire population will lose its innovative ability, this is a very, very consistent thing to bank on. Therefore, I do not believe that an investment in the market long term is anything like a casino. The volatility is a function of people's perception at the moment of what the market is worth and what may be going on at the moment, such as recession, depression, corrections, and all that. And all that is why investing in stocks is difficult. But if a person takes a long-term horizon and they think 10 years from now, 15 years from now, 20 years from now, where do I believe the S&P will be? And they ignore the short-term noise, they will make for a very successful investor.